Welcome to another edition of CMS Forex News. This is Alexander Shapiro, and today is May 8th, 2008. The labor market loosened in New Zealand during the first quarter. Employment decreased by 1.3%, or 29,000 on a seasonally adjusted basis. The unemployment rate notched up 0.2% to 3.6%. The Australian workforce grew for the 18th consecutive month. For April, the economy created 25,400 new jobs, more than doubling expectations. The unemployment rate rose to 4.2% with an increase in the participation rate. The New Zealand dollar-US dollar pair tumbled around 100 pips in the 2 hours following the disappointing employment report. After the initial reaction, the pair consolidated in a 40-pip range and hovered near 0.772 for the rest of today's session. In Germany, industrial production declined 0.5% for the month of March, and the annual pace cooled to 4.7% from February's 5.7%. The global slowdown and the higher euro are starting to take a toll on production, which had been holding up the previous 3 months. A second release revealed that German exports declined for a second straight month in March, while imports expanded, lowering the trade surplus to 16.7 billion euros. Later, in the European session, the European Central Bank concluded its interest rate meeting and kept interest rates at their 6-year high of 4%. ECB President Trichet maintained his stance on the lingering inflation and that combating it in the medium term is the main priority. The Bank of England held rates at 5% after cutting by 0.25% in its prior meeting. It had lowered rates 3 times since December and is expected to ease borrowing costs in its meeting next month. Policymakers are lowering rates cautiously as inflation risks continue to pose a problem. The euro-pound pair was down to start the global session and fell further after the German data. The pair found support near 0.782 and continued to rally as the 2 central banks announced their decisions. The euro continued gaining into the US Open, a rally of 60 pips. The euro-dollar pair found support overnight near 1.529, after it had slipped almost 300 pips from its high this week. The gains were accelerated after the ECB interest rate announcement. At 2 p.m. Eastern Standard Time, the pair was consolidating at 1.54, near its level at the beginning of the week. The pound-yen pair sank to a low of 202.4 overnight, rebounded, and then fell again to retest that level. The pair is down 500 pips since Monday, and today's low was the pair's lowest in 3 weeks. In the U.S., weekly jobless claims fell 18,000 to 365,000. However, the smoothed-out 4-week moving average increased as firms see higher costs and lower sales on the horizon. The dollar continued its slide against the yen, swinging about 140 pips lower from its overnight high near 105. The yen was boosted by weaker investment sentiment in Asian and European stock markets. After a steep fall yesterday, U.S. stocks were higher by midday on the back of Walmart and other retailers. Finally, in Canada, the annual rate of housing starts fell 12% after a strong February and March. Annual starts remained above 200,000 units. US dollar-Canadian dollar pair extended yesterday's rally from parity. Today's data, better jobs in the US and weaker starts in Canada, acted to support the greenback. Tomorrow, Canada will reveal its employment report, and both Canada and the US post trade balance figures. Join us again tomorrow as we wrap up this week in Forex News right here at cmsfx.com.